This is your market recap for no, not March. Today is April. April 1st, 2025. Happy April. So, today we played bullish. Not gonna lie, I was not expecting to play bullish today, but it happened. So let's go take a look why. Um, well, actually, why I think might be seen on this time frame. So we took out this low on Monday with that leg down. And you can see how immediately after doing that, we came up off of it. That as well as this low here, right? So between these two lows, we took them, even the close, well, no, that's the open. So we swept both of them and then went straight up after that. And we opened discount and created a downside leg. So I think we are fulfilled for our downside leg and would be allowed, I'll say allowed, to play bullish for the rest of the week. The reason I played bearish today was because of these SMTs up here. SMT of these highs that I saw pre-market. Now, where that comes into trouble is here. I also got SMT of these lows, and so I was stuck thinking, all right, we have SMTs of highs and SMTs of lows. Which one is the right one? And the decision that I came to came with the overarching bearishness that I believed we would have, um, which obviously didn't play out the way that I thought it did. So let's go look at the 15-minute. So the way that I see it, this SMT pushes price down. This SMT pushes price back up. We come up here, right? We come up here, we stall. This fair value gap right here on the 15-minute validated here with this rejection between these two wicks. So we're coming back up. This is a good spot to retrace given that it is right at equilibrium. Actually perfectly hit those there. And this 15-minute. So we hit this and I take a short, right? We take the short somewhere down to there. We will see on the lower time frames the exact trade that I took. But we ended up coming up here, taking or filling in this fair value gap, coming all the way down here, taking out both of these lows. Once again, you can see why on the daily now I'm looking to play bullish is because just like we did here, we swept this low, but we didn't continue. We swept it and we immediately came up off of it, which shows a lack of interest in continuing that move. So, as you can see, we swept it, showed no interest in continuing, and then we played bullish. So AM session was targeting these highs and these highs. The reason we reversed so late, being 12 o'clock, is because we started the move of the day very late. We started at 10:15. So um, the move of the day, the later it starts, the later it reverses most of the time. So once again, once the primary move of the morning hit its goal, we then reverse. We retrace all the way down to this 15-minute, reacting nicely off this conscript encroachment there. Then, forgot why I have this here, but I'm sure I'll remember on the lower time frame. Then we play bullish, right? We play bullish again, continuing AM sessions move. And so the way that I see it, this move of AM session, since it happened later, everything seems to be pushed back a little bit, right? Like this move started at 10:15, so the reversal happened at 12:15, which means the continuation of AM session happened at 2:15. Um, Interesting, something to keep an eye on in the future. But anyways, we ended up playing bullish, taking out this high here, hitting equilibrium of the daily fair value gap. We go back up to the daily time frame. We have this fair value gap here. Boom, there, equilibrium right there. and then obviously we come back off of that. Well, actually, no. We didn't take out this high at market close, so we meandered back down, and then boom, we take it. Market opens again at 6, and immediately we go to take out, well, it's not liquidity, so we don't take it out, but you see what I'm trying to talk about. We hit equilibrium. So on the 5-minute, another reason I was bearish was this 5-minute fair value gap reaction right there. Wait, did I go short? I did go short. I didn't catch this one though. This one, no, I didn't. I caught this one, this tiny little thing. So I was playing off this SMT down here. Like I said, we played bullish, 15-minute, see the reversal, see an SMT. I take it off a 15-second short, but nonetheless, we come up. Macro once again takes us high. We retrace downwards. You can see kind of just accumulating again between AM session and London session. No real direction. So we take out both of these resting idle lows with this move here. Play bullish, taking out highs here and highs over here. Then we retrace 15-minute. Nice reaction off constant encroachment. For the life of me, I can't remember why I put this here. Ah, that's why. Equilibrium of this bullish move here is right there. All right, so I put that there, showing that boom, price retraced below equilibrium before continuing. And speaking of continuation, we do so taking out the previous highs that were made today. Now on the 1-minute time frame, we can get to my entry. So, like I said, I was bearish today. Reason for that being higher time frame. Bearishness, a bullish Monday, this SMT up here, and this SMT being very, very slow and lackluster. So, with an overarching bearish bias for the day, I see price open, spike down, take out these lows, get ready to go long, come up, take out these relative equal highs here. Again, close, not looking to continue, showing no intent to continue higher. Get that SMT, change in the state of delivery on the 15-second, and a fair value gap. And I am short with my profits below this low. I actually took this on ES, but for the sake of not having to switch, my lows were below this low on ES, which ended up getting hit and then out at break even. Unfortunately, I did not risk as much as I should have. I should have risked almost twice as much, maybe 2.5 times as much as I did. But that's okay, right? Now I learned that the amount of wiggle room you get in your estimates of the size of your stop loss on ES is much more impactful than on NQ. And by that I mean, if, for example, if we're looking here, where's a good example? Boom, inverse fair value gap. Let's say we're playing off this inverse. If I go, all right, this high here is at 423.25, and I want my stop to be up at this constant encroachment at 53.50. If I do that math and I come up with some number on NQ, I can estimate larger numbers, right? I can round to fives, or I can round to the wholes and not need all the individual ticks. Whereas on ES, when you have like a 3-handle stop loss, 50 cents is a large part of that, which is exactly what I did today. Which is why I did not risk as much as I should have. But anyways, so we got profits and then we got stopped at a break even. Price rallied one more time, filling in this fair value gap here, again, macro, we play bearish, taking out these lows, and then start the move of the day, fair value up here, playing bullish, taking out this high over there, working our way up to this one. Again, we started the move late, so we're going to reverse off that move late as well. With this, retrace starts during lunch, take out this low, retrace higher. Looking to hit equilibrium. We did take out this low, which was a target. 5-minute fair value gap, SMT of these highs. Short could have been caught here, targeting equilibrium. That would have gotten hit. We then come down here, react off this 15-minute constant encroachment. SMT of these lows, expansion during the macro. Last hour of trading, after just taking out this low on ES, we're going to target highs throughout here and here and here. This is most likely the trade of the day. We'll see what it gives on the 15-second chart, but you can check the Instagram to see that one, because I truthfully have not done it yet. So looking at today, was being bearish right? I mean, it was in the morning. Played off that short time frame SMT. Didn't catch a huge move, but I caught something. I think where I faltered was with my higher time frame bias today. Very much so. Another example of my old bias strategy not working. We're playing bullish for London session. We then reverse. And so what does that tell us? That tells us we should continue that move bearish. Doesn't actually end up happening today. So another one in the books for good old-fashioned looking at charts. I was looking to enter again because I wasn't really satisfied with the size of this, but unfortunately there was no SMTs that I could have taken, like at all. AM session was very clean with its correlation between NQ and ES. So back on the higher time frame, because of today, I'm actually looking at the markets this week in a new light. After, once again, just like I said at the beginning, after taking out this low and showing no intent to go lower, I do believe that we could play bullish the rest of the week, right? We opened, not only did we open discount on the week, but we also added a whole nother sell side move to that, right? Just like last week, right? We opened in a premium and then we played bullish. It is rare for us to, let's say we're going up. It's rare for us to open, I don't know what I'm trying to say right now. It's rare for us to just leave a liquidity void here unless we're already planning on coming to get it later, right? And since we filled this in on Monday, even like laid a whole wick over it and everything, and left a sell side candle, I think we're going to be playing bullish. That in itself is decent reasoning. But then we look at how it reacted off these lows, and it looks even more likely that we're going to play bullish the rest of the week. Now, it depends what we see overnight, right? If London session overnight pre-market tells us to play bearish, you best bet I'm playing bearish. So look at this, see what it gives us, and then take action. But as of now, I think that with this discount opening and this sell side movement, that is more than enough of a sell side wick for us to play bullish the rest of the week. So yeah, this has been your market recap for April 1st, 2025.